If I could go back and start my trading career over from zero, this is exactly the video I wish someone had shown me. I burned through years of my 20s confused, and I lost money I didn't need to lose, all because nobody laid this out simply. So, in the next 8 minutes, I'm giving you the entire foundation, how the market actually works, the mindset that separates people who make it from people who don't, and one real technical concept you can start using today. No fluff, no 3-hour tutorial. Let's go. The foundation. Here's the simplest way to understand a chart. It's not really lines and candles, it's a picture of human psychology. Every move up means buyers are stepping in harder than sellers. Every move down means the opposite. That imbalance between supply and demand is the only thing that moves price. Everything else is just tools to help you read it. Now here's why day trading even exists as an opportunity. If you invest $100 in the market for a full year, you might be up 10%, maybe 20% in a great year. Good if you've got serious capital sitting around. But if you zoom into a single day, that same size of move, the kind that takes a whole year to play out, can happen in an hour. That's the entire game. Same risk, compressed time. That's also exactly why it gets more dangerous the smaller your time frame gets. You need real structure, or you're just gambling faster. The tools, 2026 setup. You need 3 things. A charting platform. TradingView is still the standard. A place to actually execute trades. For crypto, exchanges like Bybit work fine. For stocks, funded account platforms like TopStep let you trade with more size than your own capital. And a trade journal, because if you're not tracking your trades, you have no idea if your strategy actually works or if you just got lucky. The part everyone skips, psychology. This is the section that actually determines whether you make it, and almost nobody talks about it properly. You need to rewire 3 beliefs. 1. Losing is not bad. As humans, we're wired to see a loss as failure. In trading, a loss is just the cost of finding out if you were right. It's not a referendum on you. 2. Being wrong is not bad. Every single trade you take, you're accepting up front that you might be wrong. That's not a flaw in your process, that is the process. 3. And this one surprises people. Making money on a trade doesn't make it a good trade. If you sized in randomly, ignored your own rules, and got lucky, that's not a win. That's a loan from your future self, and it comes due eventually. Here's why none of that matters as much as you think. Say you take 10 trades, you're wrong 7 times, and each loss costs you 1 unit of risk. But your 3 wins average out to more than double what you were risking. You just made money being wrong 70% of the time. That's the entire game. It's not about being right. It's about how much you make when you're right versus how much you lose when you're wrong, and doing that consistently enough times for the math to play out. One real technical concept: reading trend and reaction. You don't need 40 indicators to start. You need to know how to spot a trend and where price is likely to react. Draw a line connecting the lows in an uptrend or the highs in a downtrend. You're looking for the level price keeps bouncing off. As long as price holds above that line, you're in an uptrend. The moment it breaks and comes back to retest that same level from below, that's often where the real move happens. The trend has flipped, and that old support becomes new resistance. Pair that with a Fibonacci retracement on any clear trend move. Pull it from the start of the move to the end, and watch how price behaves around the 50% and 61.8% levels. More often than not, a pullback into that zone is where the next leg starts. That's it. That's genuinely enough structure to start building a strategy around. How to actually test a strategy without losing real money. Here's the process in order. Find a pattern you keep noticing on the charts. Turn it into a simple rule. When X happens, I enter here. I risk here. I take profit here. Then test it. Most charting platforms let you replay old price action bar by bar, so you can play it forward like it's happening live and log every trade as a win or a loss without risking a cent. Once you've got enough trades logged, and I mean dozens, not 3, you'll know your average win, your average loss, and your win rate. That's the only way to know if a strategy is actually profitable instead of just hoping it is. Only after that do you move to a demo account, and only after that do you risk real money.
Wrapping up.
That's the entire foundation. Understand why the market moves, protect your mindset before you protect your money, learn to read 1 or 2 things really well instead of 20 things poorly, and never risk real capital on an idea you haven't tested. Everyone wants to skip straight to the entries. The people who actually make it are the ones who did this part first. If this helped, hit like, subscribe if you want more of this breakdown by breakdown, and drop a comment with where you're starting from. I read every one.